What up, boys? In today's video, I'm going to be going over the Solana long that I took today to make over $330 with Noah while we were playing Rocket League, the thesis that we went over on stream, the confluences that I used to take the trade, and where I took my profit and why, right? So breaking down the entirety of the trade, A to Z, and how you can do this for yourself. So the first step is we go to Solana USDT, right? Because we're trading Solana crypto futures, right? And we're going to, or perpetuals, whatever you want to call them. But we're going to go to the hourly time frame. That's our first step. And all we want to do is identify some structure, some key levels, some fair value gaps, and some liquidity, right? So for example, I can see that we had resistance in this level, right, as price was bearish and holding below it. However, recently this week, we see that flip and that break above this level, right? And now this was once resistance, now flipped into support. So what we can then do is look for bullish gaps, look for sell side liquidity, and identify that we are in a bullish trend and we want to catch longs back up to, these local highs. So what else are we going to do? We're going to go ahead and we're going to mark out any hourly fair value gaps that we think are important to help us with our trade, right? And in this example today, we wanted to be taking longs. So, we don't really have any bullish fair value gaps other than this one down here, and that's not really local to where price was currently at when I entered that trade around 11:05. So we have our key level, we have our 1 hour fair value gap, and the only thing that we're missing here is our liquidity, right? So if we're looking to take longs, what we want to look for is sell side liquidity, right? Liquidity that was below price. And we'll go into replay mode here so you can see what I mean. But at the time when we started our stream this morning around 9:30, right, what did we have? Well, we had these equal lows. What does that mean? Well, when two lows basically stop next to each other, especially on a higher time frame such as the 1 hour like we're on now, right, what this means is that price or sellers couldn't push price below this previous swing low, meaning there's tons of stacked limit orders within that area, right? What's down there? Well, there's buyers stop losses, there's buyers limit orders, right? And there's sellers take profit orders. So what we can then look for is a sweep below this level on a lower time frame, right? And then we can then confluence stack and try to potentially look for that reversal trade to the buy side, right? So now we can go down to the 5-minute time frame now that we have identified, again, these equal lows, which I'll delete this line, and what I'll do to make it, a little bit easier to see visually is I'll put a red line down at that low, right? Down at the wick of that swing low. From there, all we're doing is going down to the 5. You don't need to overcomplicate it and use the 30-minute, the 15, the this, the that, the third. There's no point in overcomplicating it. So we've identified that we have our equal lows here and here. Let me that drawing doesn't look too great, so let me fix that, right? But we have our equal lows here, we have our other equal low here, right? Now, are they actually fully equal? No, but they're relatively equal. Price didn't fully push down beyond that level. So all we are then waiting for, right, is a sweep below that level, and we are looking for price to continue to hold our support, this gray level, because again, this 1 hour bullish fair value gap is so far away from price that we're looking to catch the reversal in this zone where price is currently at. Why? Because we have our support, because we have our liquidity, and because we are breaking out of this bearish recent market into this current bullish market, right? And I don't mean that on a high time frame. I just mean what the macro is currently doing. So again, on the 5-minute, what we're going to do is we're going to let some candles play out. We're going to let it sweep below those lows, and then from there, what do we want to see? An inverse 5-minute gap. Why I didn't take this trade off of the 1 minute is because if you did, you would have gotten stopped out. For example, right, we have our liquidity sweep here, and then we wait for a 1 minute inversion. Well, we don't have that 1 minute inverse here, but we do have it here. After we end up inversing this 1 minute bearish fair value gap, anybody that would have taken those longs ended up getting stopped out, right? So we don't want to just trade that, hopeful inversion. What we want to do is wait for that confirmation on the 5-minute of, this larger, more important 5-minute gap right there, right? So we're going to go ahead and mark that out as our 5-minute fair value gap, and that's our bullish gap. So where was my entry, right? So let's confluence stack. We have our support, we have our equal lows, we have the sweep, these aggressive push down, signifying the sweep of these lows, and then what really confirms that. Because again, from Mastermind, liquidity does not provide confirmation, but what it provides is opportunity to then look for confirmations, right? So how do I confirm that we are now going to go long and not continue faking out and just going short? Well, because we have that sweep, we have the aggressive push down. How do I know it's aggressive? We left behind a fair value gap. How do I know we have an aggressive reversal back up? We inversed that fair value gap. So as soon as this candle got inversed, I then scaled down to the 1 minute. I waited for the pullback. I entered my first position at 11:05. So I entered right on this candle right here, right? And then all I did was I went down to the 5 minute. Again, we identified this 5 minute inverse, and then I just set my stop loss outside of that 5 minute inverse, right? And then obviously we had our take profits set at these internal highs. Why? Because swing highs and swing lows is where orders rest or where liquidity rests, and that's where we're looking to take our profit. So I entered my position, and we can go over to our broker here. I'll go ahead, I'll delete all the drawings, but you can go ahead and see. We'll scale down to the 1 minute, give you guys a better look. You can see where I entered that first position, right? Where my stop loss was outside of that 5 minute bearish fair value gap right here. Stop loss outside of it. And as you can see, as we began to create more and more bullish structure and we are confirming these levels, right? You can see that I added. So what I did, and specifically what I did to add, was I waited for this push up, right? And then what did I see? Well, I see what we saw. We pushed down into this low, right? Sweeping this internal low, pushing back down into this 5 minute inverse. And then that was where I added, right? After we have that final pushback down, you can see I added 3 times. And then where did I take my profit? Well, I took my profit at the sweep of that internal high that we had already put in right here. So it's that easy. I ended up making about $330, as we can see here, right? Or $320, made 32%. It's that easy. All we look for is high time frame liquidity sweeps, 5 minute inverses, confirmation of these levels, and then you can just target opposing draws on liquidity. In this example, where was our opposing draw on liquidity? Well, initially it was here, but then once we got that fake out and we didn't end up making that push up there, I just ended up taking profit after we went ahead and swept that internal high as well as this internal equal high right here. That's it. That's the trade breakdown. Quick 8-minute video. If you guys liked it or liked the way I break it down, or you want to see it maybe broken down a little bit differently, let me know down below what I can do better. And yeah, appreciate y'all for watching. I'll see you tomorrow morning in the live. Peace.